Hey guys, James here with Waterford Business Solutions. Today I want to continue our discussion about different types of retirement accounts that business owners and businesses can set up. Today we're going to focus in on simple IRAs. And simple IRAs are basically the easiest thing for an individual business or business owner to set up. It's very similar in a lot of ways to a 401k, where it is an employer-sponsored retirement plan. So it would affect your traditional and Roth IRA personal contributions. Do keep that in mind. We'll talk about that in a few weeks. But beyond that, it's a lot easier to set up and generally a lot cheaper to maintain there. 401ks have a ton of regulations and have a ton of generally management fees because you've got to get a third-party administrator involved. Whereas a simple IRA is fairly simple to set up. You talk with a investment advisor if you want to do a single investment firm for the entire company, or you let your employees choose whoever, wherever they want their investment to be set up at. Based off of that decision, you fill out one of two forms with the IRS to go ahead and let them know that you want to set up and start doing a simple IRA plan. And from there, once the employees go ahead and opt in, that's pretty much all the paperwork that you have to do, other than making sure that you file a simple annual report to ensure that you've given the proper contribution that you need to give here with a simple IRA. It's also really simple to see who qualifies. Qualifications happen at minimum in one of two ways. Either they are an employee, not a contractor, not a subcontractor, but a physical W-2 employee with your company, and they have worked for at least 2 years with you and made at least $5,000 with you over those past 2 years. If they meet all three of those requirements, they are eligible for the simple IRA, and they must go ahead and be included in the simple IRA. If they don't meet those requirements, though, three fairly simple ones to figure out, they do not have to, or they aren't eligible to participate. Now, you can always modify those eligibility requirements and make them simpler. You can take it down so that instead of 2 years, you could say 1 year, you could say 6 months. You just can't exceed that 2 year there. So generally overall, fairly simple to work with and fairly simple to understand here. As far as the contribution is fairly simple. You as the employer have one of two ways that you can contribute. Either you choose to contribute at a 2% of whatever their wages are. It doesn't matter if they're contributing or not, but 2% of whatever their wages are, you are going to contribute that. You have to at minimum do that, where even if they aren't contributing, even if they are not putting anything into the IRA account, you still have to give 2% of whatever their income is. The counter to all of that is going to be you've got an option to do a 3% of a match. So the employee has to put in 3% and you have to put in 3%. Now obviously you can't force employees to participate or anything like that, but it is something that you are giving them a little bit more money if they choose to also participate there. You do need to make sure that you follow guidelines on that 3% match there. There are certain things, but it's still overall fairly simple, nothing super crazy at all there, and quite easy to follow along with there. As far as contribution limits for 2024, and just like any retirement account, there are adjustments every year for inflation and everything here. For 2024, if you are under the age of 50, a maximum of $16,000 can be put into an IRA or a simple IRA account for your employees. Now, a key thing there is you as the employer can put in a maximum of $16,000. With simple IRA accounts, the employees are not able to put in any of their own money. It's always got to be something that you as the employer are putting in for them. So for the employee, if they want to max that out, they're going to have to make sure that their contribution that you're withholding from their paycheck is high enough to match that $16,000, because they can't go to their banker, they can't go to their investment firm and say, hey, here's an additional $5,000, please put the money in there. Now, if you're over the age of 50, then you can go ahead and contribute an additional $3,500 for 2024. So a maximum of $19,500 there for 2024. So definitely a much higher limit than what you can do with a traditional or Roth IRA. So definitely really good to see that. Now, there are a myriad of downsides depending on how you look at it. First and foremost, you as the employer, it's mandatory that you are paying into this. You've got that minimum 2% match pretty much no matter what. So that is definitely a big one to look at there and to consider there. The other thing to look at is for employees, they are not able to, once they leave your employ, to convert that simple IRA to a traditional IRA unless it has been active for at least 2 years. So your employees, their money is basically locked up in a simple IRA and locked in your hands, to be honest, for 2 years after the account is created. So let's say that you've got an employee that worked for you for 2 years, qualified to have a simple IRA, and then 6 months after they qualified and you started putting money in there, that money is locked up until a year and a half after they leave your employ, at which point they could then convert it to a traditional IRA. That's definitely a big downside for employees and something to consider there. The other side is going to be for you as the owner. $19,500, that's a lot if you're over the age of 50. $16,000 is a good bit if you're over the age of 50. But when we get into SEP IRAs or 401ks, those are much, much higher numbers there that you can contribute to. And I definitely encourage you to go back and look at those videos there and look at everything to figure out what is the best option for you there. Simple IRAs, or Savings Incentive Match Plan for employees, like pretty much any other retirement account, does have age-based bases for when you can withdraw money from the account. Just like pretty much any other retirement account right now, you cannot withdraw money from a simple IRA prior to being 59 and a half. If you withdraw money prior to 59 and a half, you will be paying both the income taxes on that money and a 10% tax levy on it for an early withdrawal. Even worse with simple IRAs is if you choose to withdraw money within 2 years of that money going into the simple IRA, it's not just a 10% penalty, but it's a 25% penalty that you end up paying there. So definitely a higher penalty in the short term than other retirement accounts. Overall, simple IRAs are great for smaller businesses, and you must have less than 100 employees to even consider setting this up. So for a lot of our clients, it is a great option for them to utilize here because of how easy they are to set up, how easy they are to manage, and based on those regulations there, the ease or the less expense, the cheapness of running one of these plans compared to using a 401k there. So definitely some big benefits there. But it is important to keep in mind there are detriments, such as the time in which you can pull money out, the time in which the account can be transferred to the actual employee, the limit of how much money that you can put in, and the limit in the requirement to participate and the requirement for you as the employer to put money into these accounts. Overall, if you feel that you're wanting to incentivize employees to work with you and incentivize employees to stay with you longer, a simple IRA is definitely a great introduction. And it does allow them, like other retirement accounts, to transfer money in from old 401ks or other traditional IRAs to consolidate their investments. If you want more information, I highly encourage you to reach out to an investment advisor and an accountant to best understand how it's going to affect you and your business. If you need someone to talk to, we here at Waterford Business Solutions are happy to have that conversation with you and help you through the tax implications of the business, and always can refer you to multiple different investment partners that we have if you're ready to set one of these up. Feel free to reach out to us at either 864-351-0852 or give us an email at info@waterfordbusiness.com. I do encourage you, please, to like and subscribe to our channel, comment and share this video with anyone that you feel can utilize it, as it does help us reach more people and increase everyone who's able to get this useful information. In the meantime, I hope you have a wonderful rest of your day and look forward to helping you more as we go along.